Hi, this is Frank from Altcoin Buzz. What I love about the crypto space is that there's always new developments and exciting stuff going on, and today is no exception. Today we're going to cover Cardano with its mainnet in July, a possible Coinbase listing, its #1 place in terms of crypto project development activity, and a detailed price action and technical analysis. Be sure to stick around till the end of the video where I do a price prediction for Cardano. Anyway guys, how were your weekends? I spent Friday through Sunday researching and producing a video about the Quant network. It was great fun. Now, however, onto more great fun with all this exciting Cardano news. As many of you I'm sure know, the Cardano Shelley is the whole rage right now. And in this recap, the input-output Hong Kong monthly Cardano development update, we can see the golden question answered, which is of course, when Shelley? And here in this video, he says that on June 9th, the Haskell Shelley testnet will open. On June 16th, all of Shelley will be visible. On June 23rd, the hard fork combinator test will begin. And on June 30th, we will ship Shelley. So there's a lot of hype around this all over the internet. You can see that Charles Hoskinson's tweet is getting a lot of traction, a lot of retweets. And this is the Cardano Virtual Summit, which he's promoting. And the Cardano Virtual Summit is also creating a lot of excitement. The Shelley era has arrived. It's not just an update, guys, it's an era. This will not only be a critical milestone in the history of blockchain technology, but a shift in how we use technology for the betterment of everyone everywhere. Big claims here, but you know, fair enough. They've been working really hard on this. I watched an interview with the founder, and you can tell that he's so passionate and so committed to this project. With the start of the Shelley era of Cardano, we are bringing full decentralization. That's the one word we want to hear, right? We are bringing full decentralization to the world's most advanced blockchain platform. There will be a 2-day virtual summit with the biggest names in technology, like Vint Cerf and Stefan Wolfram, and there will be lectures and keynotes and workshops on the science of blockchain, blockchain and business, building the Cardano community, government and regulation for blockchain, discussing the Cardano governance model, and much, much more. Register today. So that looks really exciting, guys. If you're a fan of Cardano, I strongly suggest you check that out. That's on the 2nd and 3rd of July, which of course, as we know, is just after the launch of Shelley. Next, I thought I would read out to you some phrases from this Reddit post. I especially like this sentence. The science, the papers, the team always made it feel like more than just some dudes coding cool stuff in someone's basement. Now, don't get me wrong. I'm all about cool dudes coding stuff in their basement. That's how Bitcoin got started. However, if we want to get respect, maturity, and real progress in the blockchain cryptocurrency industry, we do need the science, the papers, the peer reviews, all of that good stuff. So that's what I really like about Cardano. We're talking 1,000 plus stake pools, 50 to 100 times more decentralized at a fraction of the power or cost than some other blockchains. Shelley is just the beginning. It's easy for us to get caught up in dates, features, price, or what have you, but to all the real fans of Cardano, especially the OGs, enjoy this moment. It's our time because through Shelley, we are Cardano. There's been a lot of hype around the fact that Cardano is the crypto project with the highest developer activity over the past 30 days. According to Cryptonomist, this is revealed by a graph published by DAO Maker and made using data extrapolated from Santiment. Furthermore, this examines the number of events recorded in a given period of time. At the top, there is the Cardano project with 450 in terms of the developer activity value. In second place, Kusama with just 320, and Ethereum with just over half of Cardano's activity during the past month with 262, and Genosis with 240. DAO here created this graph for us, showing again that Cardano is in the lead for the average developer activity over the last 30 days. And this is nothing new for Cardano. Even according to this Reddit post a year ago, Cardano ranks #1 amongst top 100 based GitHub commits activity in the year of 2018. So there's a lot of evidence to suggest that Cardano is really pushing the limits when it comes to developer activity. Furthermore, there's the hype of being listed on Coinbase. Now, we wrote this article a year ago where we said that speculation started regarding the potential future listings of other altcoins that were previously mentioned in Coinbase in July last year. So there were 5 coins which were mentioned in July last year by Coinbase, which were Cardano, Basic Attention Token, Stellar Lumens, Zcash, and 0x. Besides ADA, the 4 others have been listed. So that creates a lot of speculation as to why and when Cardano will be listed on Coinbase. Further speculation has been created by these messages from Charles Hoskinson himself. You all know what the best part is? I got more in my back pocket that I didn't tell you about, but you're going to have to wait. So a lot of excitement, what does this mean? We don't know, but there certainly is some reason to expect that this might have something to do with a Coinbase listing, since obviously Shelley is not something in his back pocket. Shelley is something which everyone knows about. But this really is exciting times for Cardano. Be sure to join the Cardano official Telegram chat if you want to join in on all the buzz and all the hype and all that good stuff. Next, let's have a look at the technical analysis for Cardano. Let's zoom out to the weekly first of all. So in terms of the weekly, we already discussed this before. We have these bottoms over here at 0.027. We had a close over there, and then we had a close over here as well. So this is the major bottom support. And again, I wouldn't call this an exact level. I would call this a zone, because we have a low over here at 0.027. We have a low over here at 0.03, and we have a low over here, 0.0178. And I'm drawing this box in here for a reason. The top of this box is here because of this low. The bottom of this box is not at the very bottom, because I view this as sort of a real extreme. And the wicks, they count for a lot of volatility. And in reality, what matters most is the candle closes. However, because we have 2 wicks going all the way down here, I'm drawing this support box over here. Remember, technical analysis is as much an art as it is a science. So feel free to draw your support as you like to. In any case, we talked about how we have a lot of liquidity in this zone just above this support. So that means that this whole area between 0.02 and 0.05 is a good potential support. However, will we even come down to this point? I personally don't think so, because we're so bullish right now. Why are we so bullish? Look at this. Look at these 2 big-ass green dildos over here, okay? These big green bars here represent volume. What does that mean? That means that there's a hell of a lot of people buying and selling at these price ranges, and that is what has led us to this level. It means that out of all the people buying and selling, the buyers have come through and they've pushed the price all the way up here, and they've been fighting sellers on the way up. So for example, if no one was selling Cardano and people were just buying, then you wouldn't see much volume here. However, it's better to see volume, because that means that people are also trying to sell, but the buyers are winning out. So it means that the buyers and sellers are having a good fight, and the buyers are coming out victorious. That's essentially what volume means. And look at how much more volume this is than the previous many days and even weeks behind. Otherwise, on the weekly, the other thing I'm seeing is, of course, the closes at the 0.097 level over here, and then finally the candle high at 0.1. Looking at the RSI, we can see that we are oversold here, and I will be mentioning this on the daily chart as well, since we are also oversold there, which technically means that the market has made an extended move up without a pullback, and you can see that very clearly here, because there is only 1 red candle on this whole way up. However, this does not mean that we go bearish. It does not mean that we're going to have a huge correction. What it does mean is that we are likely to come down to hit, at the very least, the 70 RSI at some point. If we break the 70 level to go into this oversold area, it means that there's a lot of momentum going in that direction, which means that it's a bad idea to short just because of being oversold on one time frame. On the MACD, we can see that we had a bullish crossover of the 12 and the 26 moving average here. That's the blue line crossing over the orange line. We can see the MACD ticking up very nicely here. Big upticks, so nothing bearish at all about that. Let's now go down to the daily. Have a look at the MACD. We've had nice upticks, but look, now we're coming down, and it's quite possible that we will come down to the 0 level within another couple of days. You can see that the 12 moving average is starting to come down here, and we could very well see another scenario like this over here. Here, look at this. This is pretty much exactly what I expect we might see, where the blue line is well above the orange line, but then we start coming down. Maybe we will cross through it again like that and cross again, and then come back up for another bull run. We might see something similar to this happening here, where we just have a normal and healthy corrective move where the 12 comes just below the 26, or maybe it just touches on it and then bounces up. Next, let's have a look at the RSI. So you can see here the RSI, we topped out at 80, came down, came up, came down, came up, and here we had essentially a double top on the RSI at 80. However, the price made a higher high over here, right? So we went from 0.076 to a close of 0.088, which is a 15% move up. However, the RSI is not moving up in the same direction, which is not a good sign. It means that we are likely going to see some sort of consolidation or pullback before a next move up. Okay, so let's look at the price action on the daily. Naturally, we can see that there's a very explosive motive wave up here, which just means that the market is acting a little bit impulsively. There's not too much of a correction here. And it is for that reason that I personally expect that we will see some sort of correction. Now let's have a look at these exponential moving averages, more specifically at this 21 moving average. You see this orange line that represents the 21 exponential moving average. Now look what happened the last times that we came down to this line. Here we found support and boom, we made a 60% move up. What happened here? Here we had wicks coming down. Now, if you're new to technical analysis, you might say, hey, well, we broke this line, so this wasn't holding a support. However, wicks are not that relevant in technical analysis. They represent extremes in the market, and especially on this daily time frame, what is more relevant is the close of this candle. Okay, we have a close at 0.047 and then another open at this same level. What that means is that there was some extreme price action which was taking us down to this level, but it's just not nearly as important as when we close on the day. When we close, the candle close of the day is the price at the very end of that day. Okay, this represents volatility within that day. And of course, what the fact that we closed above the 21 moving average essentially means that we found support there. It means that the bears try to take us down, but boom, the bulls pushed us right back up. Okay, so let's see what happened when we closed above this 21 moving average the second time. Boom, 22% move up. Okay, we came down, we found support again. Boom, we saw 12% move up. We came down, we found support again. And boom, here we saw the 78% move up, guys. So what I am expecting is that we will see a pullback based on the RSI and the MACD. Again, the RSI, we had a double top over here. I suspect we will at the very least come back down to the 70 line, if not a little bit below. And the MACD, we see a curving structure here, a curving line here, which will likely bring us down to the 26 moving average. Again, this is the 12 moving average, the blue line. The 26 moving average is the orange line. I expect that we will likely see a touchdown here as we saw back there. We can see the MACD is ticking slowly down here. Again, a sign that we're consolidating. And to be more specific, I think that we will come somewhere on this orange line. Of course, this line will be moving as the price moves. However, we have another point of support, which is this previous resistance. You see this point over here, right here at 0.071. We had candle close over here. Okay, this green candle closed. And then what happened the next time we came here? Well, first of all, we smashed right through it here, which is impressive. We broke that previous high with this move up. But then we came down and we found support at this line. And look at this wick. So what this wick means is that the market brought it down here, but boom, it came right back up like a spring bounce. You know, it just pushed it immediately right back up, which shows that there is a lot of buying interest at this level. There were probably some very big orders set over here waiting for this pullback, and then even maybe some more buying along the way up, immediately pushing us back up, showing strong support at this level. So again, we might see a 15%, 16% correction here coming somewhere between the orange line and this previous resistance, turn support, and hopefully turn support again. In terms of the moving averages, something else which is very bullish is that we're seeing a fanning out of these moving averages. This means that the lower moving averages are above the higher moving averages, which signals bullish momentum in the market. The first time we saw the crossover of all of them was right here on this green candle, but now we have not only seen a crossover of these moving averages, but we're seeing a fanning out, which means that there's more and more space between these lines, which means there's more and more bullish momentum. So in terms of price prediction, let's have a look at Elliott waves. So I'm not going to go into detail about how I've created these Elliott waves because it will get quite technical. But comment down below if you are interested in seeing my Elliott wave analysis. In any case, Elliott waves have 5 waves. We have 3 impulsive waves up and 2 corrective waves down, okay? So I am drawing it like this. We have the first wave up here, the second wave correcting down here, then we have the third wave going up here, and I expect that the fourth wave will come down and correct somewhere in this region, as mentioned, because we have previous resistance turned to support and the 21 exponential moving average, which acted as major support in the past. And based on this, I expect that we will have a 5th wave going up there. So if I had to make an educated guess about what price level we might reach within the next several weeks, so remember that we have the Shelley testnet launching on the 30th of June, and right now we are the 9th of June, so that's about 3 more weeks of price action until then. I suspect there's a good chance that we will see a few days of correction, maybe even 1 or maybe even 2 weeks of correction, and then one final move up to break these previous highs. And then we will likely, unfortunately, have a buy the hype, sell the news type of event. This is a common occurrence in markets where people get very excited about news coming up, so they buy, but then when the news finally comes out and the hype cycle has finished, then people lose their excitement and their interest, and then the price corrects. It doesn't mean that the price crashes hard, but it's quite likely and possible that the price will correct sometime after that Shelley update. So if we're expecting 21 more days of potential bullish action, then that would be up to about here. Honestly, I don't know that we're even going to come down and correct for this 4th wave. I would say it's quite possible that we, come down, correct just a little bit, and then find support at this 10 moving average. Because look, on this move here, we found support at the 10, and I wouldn't be surprised if we find support at the 10. Maybe we have a wick coming down very quickly to the 21 and then pushing us back up. In fact, I suspect it's more likely than not that we will break this previous high within 3 weeks. And if we do come down and correct a bit more than that, then I suspect that we might come down closer to where I suspect this 4th wave will finish, which is down here at the 0.07 level. That's it from me, guys. Be sure to like and subscribe if you haven't already, and comment down below if you're hodling or trading Cardano. See you in the next one.